Morning, everyone. Welcome back. This is Naveen Gorky Kamaraj, and today's webinar is about understanding what is the Relative Strength Index Indicator, RSI indicator, and a couple of trading strategies using the RSI. So let's get started. So this video is for educational purposes only. Please watch through the video and feel free to ask any questions at the end of this webinar. Thank you. Well, what is RSI or Relative Strength Index? See, RSI was developed by J. Wells Wilder in the year 1978, and it's a momentum oscillator. So we call it as an oscillator because, as you see in this picture here, there is a range between 0 and 100, and the price or based on the price movements, the RSI value oscillates between this 0 and 100. It doesn't. It's a bound. There is a bound range for the 0 and 100. It doesn't go beyond 100 and 0. So it's a momentum-based oscillator. Fine. So what is RSI? RSI actually it measures the ratio of up moves to down moves in the previous candles. Then there is a weighted calculation which normalizes and gives the RSI value. This RSI value it oscillates between 0 and 100. Actually, RSI is based on the average gains versus average losses. So you see this formula over here. This is the formula which is used for calculating RSI. Basically, if the average gains are higher, the RSI value is more, and if the average loss is higher, the RSI value is less. I'll show you a screen of how the RSI is usually displayed on trading platforms. If you see here, this is our typical candlestick chart. So below that, you have the RSI indicator. So it is not an overlay. It lies below the price on a separate area, and it's an oscillator which moves between 0 and 100. So this is how the RSI looks on your trading screen. Okay. Now, typically, the RSI is considered overbought or oversold. So what is overbought? See, when the RSI value is above 70, it is considered as overbought. See, this situation is like this. The prices have risen more than the market expectations, and at any time, the price may reverse and go down. This is called as overbought. And we have one more situation which is called as oversold. So which is when the RSI value is below 30, this is a situation in which the prices have fallen much more than the market expectations, and the price might eventually increase. So basically, RSI is considered as overbought or oversold. If it is above 70, it's considered as overbought, and if it's below 30, it's considered as oversold. The levels 70 and 30 are not fixed. For example, if you are using Alice Blue trading platform, by default you have as 80 and 20. I have shown you 70 and 30 as the range, but it can be anything based on the market volatility and the particular script which you are considering. And there is one more line which is called as the 50 line. Anything above 50 we consider as bullish, and anything below 50 RSI value we consider as bearish. So keep this in mind. So more than 50, the market is in a bullish trend, and less than 50, we can understand the market is in a bearish trend. Okay. Now, when we are talking about RSI, there is the look back period, which is the number of candles that is to be considered. So by default, the look back period or the number of candles is 14. If this look back period is reduced, there is high sensitivity and high volatility. And if the look back period is increased, there is a smoother line and there is not much volatility. For example, a 10-day RSI, it will reach the overbought and oversold quicker than the 20-day RSI. This is for your understanding so that you know how the look back periods can be used. Okay. Now, as I showed you, the RSI indicator oscillates between 0 and 100. Now, we have two types of markets. One is the range market and the other one is the trending market. See, during strong trends, like for example, if it's in a high uptrend, we will have a lot of, there is a lot of uptrend, which means RSI will remain in the overbought, which is more than 70 for a longer time. So similarly, if it is a downtrend, the RSI value will remain below this oversold level for a longer period of time. So it's like, and this is typical of any momentum-based oscillator. So RSI, based on RSI, you can understand where the market is, whether it's the overbought condition or the oversold condition. So RSI works best when the price moves sideways within a range. What happens is from 30 it goes up to 70, it touches, then it comes down to again 30. It's like this. It's an oscillator. So it works best. It works best when the market is in a sideways. It's a range market. Why I'm saying this? Because we have divergence, which means we will see about that later. So basically, RSI, the values are very good to understand when the market is in a sideways because it moves up and down. It's in a range and down. But if there is a strong trend, it stays above the oversold for a long time or below the overbought for a prolonged time. Okay. Now, during the uptrend, RSI fluctuates between, say, like 40 to 90. For 90, it's too high. It fluctuates between 40 and 90. So what does this mean? See, when the RSI comes down to 40 or 50, this is the support. So it can either bounce back and go up towards 90, which means the price will increase, or it can reach this 40 or 50 zone and it can come out. When it comes below 30, it's get into the price starts going down. It's a breakout. Similarly, if the RSI, if the market is in a strong downtrend, the RSI is fluctuating between 10 and 60, and this range of 50 to 60 acts as the resistance. So when the price comes up to 50 or 60, this is the point where it will bounce back because there is a strong resistance over here. You can check these out on the charts as well. I'll show you. So this is the way where you can use during a strong uptrend or a downtrend RSI to identify where is the support and where is the resistance. Again, the look back period of 14, this can be anything, 25, 10, 250, whatever. And it depends on the volatility and the type of trade which you're looking for, along with the strength of the trade and the particular script's volatility. All right. Now, I was telling about divergence. So we need to know this. What is divergence? I'll show you some examples, but I'm just explaining you what it is. See, divergence is when the price moves up, typically RSI moves down. This is a divergence because they are varying. They are not in the same direction. So this is a divergence, and it can be a bearish divergence or a bullish divergence. So when the price goes high or a new high and the RSI comes with a lower high, it means there is a divergence. So again, there is a bullish divergence. It means when the price comes low or less, but RSI makes a higher low compared to the previous candles. What does this mean? What does this mean? It means that there is a possibility of reversal, or you can call it as a turning point, which is possible in the near future, which is imminent. Now, divergence is to be considered when this starts and happens in the overbought or oversold zones. Is it clear? So divergence is when the price and RSI are moving in different directions. When this happens in the overbought or the oversold zones, it means there is a market reversal possible coming in the very short term. Okay, this is about divergence. Now we'll talk about reversals. Fine. See, when the markets, there is, for example, stock markets. All stock markets are tending to be positive in the long run. So whatever pullbacks happen, these are all for short term or short lived. So any reversal will definitely happen in the stock market. So whatever goes high will come down and again go high. This is the principle of stock market. That's why we have a buy signal over here. Now, if we have two types of reversals, one is a positive reversal and the other one is a negative reversal. See, these reversals, they do not happen in the oversold or overbought area. Divergence happens in this overbought and oversold area, but reversals, they do not happen in the oversold or overbought areas. See, how it happens is when the RSI forms a lower low and the price form a higher low, which means, yes, there is a possibility of it's going to be reverse. If you watch in the next couple of candles, this will reverse for sure. And if it's a negative reversal, it's exactly the opposite of positive reversal. So what happens is RSI forms a higher high, but the security or the instrument or the script or the particular stock, it forms a lower high. This means they are in the opposite directions. One is going up and one is going down, but it is not in the overbought or oversold area. This means there is a positive or negative reversal coming up. Okay, now see, this, what do we call this? This is like a reversal back to the actual trend. See, if in an uptrend, there can be a pullback. So it comes down and at one point it reverses. So we can identify this reversal by using RSI, wherein we know that, okay, at this point it's going to reverse because of the reversal we identify but above the oversold and below the overbought. It happens in this zone, so we identify. Typically, a positive reversal happens in the 30 to 50, and the negative reversal happens in the 50 to 70, in the different range. So this is a way to understand that the main trend or the long run trend is about to resume. And please remember that positive reversals happen only in uptrends, and negative reversals happen only in downtrends. So this is to get back to the current trend from the short pullback. Okay, so I've shown you, and I've explained you what is divergence of RSI and what is reversals of RSI and where they happen. Okay, now I'll show you some typical examples of how the RSI convergence and divergence happen. For example, we will see the divergence. See, this is we have two types of divergence, bearish and bullish. And see, you can see this chart. This is for the price. This action is for the price. And this chart is for the RSI. Here you see that the price moves up, but RSI comes down. So if we have such a situation and it happens in the overbought or oversold zones, it means the price will come down, which we can understand by this bearish divergence. And same way, if you're going for a bullish divergence, how it works, the price comes down, but RSI goes up. And this happens in the oversold. What it means, oversold and overbought, what it means is like the price will go up. So divergence always happens at the overbought and oversold zones, and it means that the price is about to go in the other side. This is what we call as bearish divergence and bullish divergence. Now, also we saw about positive and negative reversals. And what are these? If you see here, this is also similar. What happens is the price comes down, but RSI moves up. What does it mean? And it happens outside this oversold and overbought zones. What does it mean? Again, the price is going to go in a negative direction. This is what it means by a negative reversal. And if you're looking for a positive reversal, it means when the price is moving higher and the RSI is moving upwards or downwards, it means at one point it reverses. The price reverses and goes in the right direction. So this is what it means. What is a divergence and what is a positive and negative reversals. So I think you have an idea of divergence and reversals now. Next, we'll go for a couple of trading strategies using RSI. I have showed you what is RSI. So we'll see a couple of trading strategies with RSI. For example, I'm showing you this chart. This is for State Bank of India on Alice Blue platform. If you see here, I'm going to include RSI from the studies. Yes, RSI is here now. So if you see here, there are a lot of settings over here. You can have, say like, I'm just setting up some colors so that you identify the zones. If you see here, you can have the zones. For example, I have drawn 70 and 30. Okay, I've mentioned 70 and 30, and I've given colors because this is the oversold area. If you see here, this is an overbought area. This is an overbought area, and this is an oversold area. By simply looking at this graph, you see this. Whenever the market is in a oversold area, you can see that after that the price goes upwards. And once it hits the overbought area, at one point you can see that the price comes down. So this is what we say, like RSI, we have two zones. One is oversold and one is overbought. So you can understand from just by looking at this chart how it works. Okay, now let's get back to our fine. So we'll have a look at this strategy now. What is this strategy? It's a long-term trading strategy. See, how do we do this strategy is, we will take 250 days period RSI and any RSI value above the 50 line, it's a long-term uptrend. And any RSI value below 50, current RSI, it means it's in a long-term downtrend. Okay, so how do we use this? See, the best way to trade long-term is to trade with the trend. So if there is an uptrend, you have to definitely enter and buy at that time. So I'll show you how to find the long-term trend using the RSI 250. I'll just change this to 250. Okay. So now we have RSI 250. Okay. I would also like to have a line drawn showing the 50 line. What color do you want me? I'll have this as red. Okay. Okay. You see here, there are times when RSI is higher and there are times when RSI is low. So I'll take up say 1-day chart. Okay, or see, when the price is, I'm showing you an example here. See, when the price crosses and goes above this 50 line, it's a buy signal in the long run. So you have to enter here and you will get a good profit. For example, if you're entering over here, See, if you are entering here, it's a buy signal. And again here, if you are selling here, it's a sell signal. If you are entering here, it's a buy signal. This way, you can identify in the long run how the market, the trend is. So this is the way of seeing how, for example, over here, I'm just showing you a day candle. You see this, if we enter here in the long run, you enter at say 1.7, you get good profit over here in the long run. So this is what it means. So there is a crossover of the 50 line by using RSI 250, which results in buy and sell signals. Okay. Now let's get on to the next strategy. This is one strategy wherein you can use a RSI for a long-term strategy. Okay. Now, all right. So the next strategy will be, it's a short-term trading strategy or a swing trade strategy. How do we do this? We use a 10 days or a 10 days period RSI. And when the RSI exits 30, that is the oversold zone, we can say that it is moving towards an uptrend. So you can also get the confirmation from the bullish reversal candlestick pattern, or you can also compare with the previous day's high or the previous week's high, and then you can make an entry. I'll show you this now for a short term. Okay, so let me add an RSI now. I'm going to have RSI 10 here. RSI, okay. I'll make it 70, 30, and green and red. All right, so this is your RSI 10. Okay, now I'll just show some examples. For example, over here, if this is RSI 30, when it's or which is the overbought, when it exits the RSI 30 area zone, you can make a buy here. If you're buying here and holding it, the price moves up to this price, and then there is an uptrend here, and you can make the benefits out of it. And this is for safe traders, and people who are aggressive, they can wait, because the price retraces back, and again it bounces back to a much higher value. So this is one scenario wherein you get a profit by doing the trade. Okay. Now, again, if we are going to enter here, this is why we say we need a confirmation. So we always check for a pattern, a bullish reversal pattern, or you can wait for the previous day high. In this case, the previous day high has not been reached after this. It has not been reached, so we are not going to enter here. So definitely here we will enter, because the price, we get the confirmation by checking the previous candle, and then we enter at a higher price compared to the previous candle. So here definitely there is a profit if we enter after the confirmation. Now, we are talking about a couple of days or maximum weeks to make profits over here. And the key is to enter at the right time. For example, you can enter here, because no, we did not enter. We cannot enter because the price here, it does not cross the previous candle's high. But here, yes, it crosses. So we can get this profit. And if you are still going to hold, it goes up to here, or this is the minimum profit you will get. So this is a short-term trading strategy where you are using RSI I'm sorry, I'm using 14 here. It should be 10. If you're using RSI 10 here, you will get signals for buy when the price comes out of the oversold area. And you should take the confirmation by checking if the price crosses the previous candle's high, or as we saw yesterday, we saw a lot of candlestick patterns, and we identified what are the different type of bullish reversal patterns. And if anything like that is found, we can definitely go for a buy call here, whether it's a hammer or inverted hammer or a morning star or a bullish engulfing. For those of you who have not seen this candlesticks patterns, you can check out the video on YouTube. It's available over there. Then you'll understand this better. So once this confirmation is got by the reversal pattern or from the previous candle, you can proceed to the entry of this trade. Okay, so this is a strategy for short term. Now let's move on to the next one. Next strategy. But here we'll talk about intraday trading strategy. See, like first strategy is we are going to buy when the price exits the 30 oversold zone, and when the price exits at 70 downwards, we are going to sell. Okay, so I'll show you this. We are going to use the RSI 14 time period. For example, I'll change this to RSI 14. Okay, and I'll change this to say 10 minutes. Okay. See now, for example, here we have a situation wherein it exits the RSI 70 level. So here we can make a sell. If you're making a sell, we get the confirmation by the next candle or the previous the candle pattern. Okay, then you see that there is a small profit over here. It's not a big profit. Yes, there is a small profit, and when you adjust the stop loss as the price moves the target, you're not going to lose any money. You'll make a profit over here. And again, here if you're going to make a sell here, yes, you make a huge profit here because there is a downtrend here and you get a huge profit from here to here. Now, here again there is an entry. I'm saying about exit from the overbought zone. That is, it comes below the 70 mark. So here again, we get a good, if you are entering here, we get a good profit over here. Again, over here, it's a sell. And here also, we get a good profit over here. Now, let me show you some buy calls. You see here, there is a buy call here. Because it exits the RSI 30. And this buy call, we get a good profit margin over here. And here also, if you're entering here, it's a buy call. You get this profit in the short term. And even if you're going to wait for a longer period, you will get a longer profit. So this is for safe traders, you get a minimum profit over here. So this is one strategy wherein we are using RSI when it exits the oversold area, we take a buy call here. And when the RSI exits the overbought area and comes down from 70, we get a sell signal here. So we get the confirmation by the pattern reversals or by using the previous candle's low for sell and the previous candle's high for buy. Okay, this is one strategy of using RSI for intraday trading. Next one. Okay, fine. So there is one more way wherein we have crossovers, like we saw previous webinars. Crossovers are a very good way of identifying entry and an exit. So we will see how we are going to use the crossover here. What we're doing here is there is a basic RSI 14, and also we have a moving average 50 of RSI 14. Let's see how it works. When the RSI 14 crosses in this moving average 50 upward, it's a buy signal. When it crosses downward, it's a sell signal. And this works fine in the trending markets only. So now we will add one more RSI. Now we'll add a moving average over here. Okay. In this, I'm going to select RSI 14, and it's a 50. Okay, fine. Got it. See, now here you see that the red line, which is the moving average of the RSI 14. And you have a regular RSI 14, which is a black line. So the strategy here is we are not going to trade 30 and 70. We are going to trade whenever there is a crossover. For example, here there is a crossover from down to up. We get a buy signal. And here we get a crossover from up to down. So it's a sell signal. Definitely, yes, this is a profit. This is also a profit. And here it crosses up, but it's quite choppy. If you're going to hold, you still get a huge profit over here. This way, if you see that whenever there is a crossover, you can enter the market and take a call. If it is crossing upwards, you get a buy signal. When it is crossing downward, you get a sell signal. Okay, so this is one more strategy which you can use for trading using RSI. And always remember, do not trade with just one indicator. You can take the confirmation from other indicators or the patterns so that you are safe. And always remember to have the stop loss modified when the price moves towards the target. Okay, got it. Now I showed you 4 different strategies. One was a long-term strategy, which was like RSI 250, and when it's above 50, it's an uptrend, and when it's below 50, it's a downtrend. This can be used for entering in the long run. This is one strategy. And the second one we had was for a short term, which we are using RSI 10, and we are using the when it exits the oversold area, that is when it exits the 30, we get a buy signal here, and also we take the confirmation as usual from the previous candle's high or using the candlestick reversal pattern. Then we have 2 intraday trading strategies, which is like we are using only RSI 14, and then we enter a buy call when it exits the oversold, and we enter a sell call when it exits the overbought. That is from 30 upwards or 70 downwards. So these are 2 ways where we can get buy and sell signals. And the last one is we are going to have a combination and a crossover, which is like RSI and a moving average 50 of RSI. And whenever there is a crossover, upward it's a buy signal, and then we get a downward sell signal. Okay, I'll just summarize what is RSI now. So all this is what you have been seeing so far today. See, RSI is a momentum-based oscillator. Oscillator means it sticks to the 0 to 100. It moves only between this zone. And by default, we get 14 as a time period. And the look-back period or the time period, if it is reduced, RSI gets more volatile and gives a lot of signals. Some of them are fakes also because it's a very short period. And if the time period is increased and RSI gets smoother, that's why we are going for RSI 250 for the long term, where we get a smooth signal and when we get the crossover. See, typically the overbought zone is above 70 and below 30. Normally people say it is 80 and 20. No, that's not always right. It's better to be safe and be around 70 and 30 so that you can avoid the reversals that happen in the overbought and oversold regions. Now, I showed you about this RSI middle line, which is the 50. Anything above 50 RSI, which means it's an uptrend, and anything below 50, it means it's a downtrend. See, we also have divergence, which happens in the oversold and the overbought area. And these mean that there is an upcoming reversal very soon. And I also showed you how to identify the patterns for reversal. So once you use the system, you backtest and you review the different options, you get to know and you understand over a period of time what is divergence, how to identify reversals, and what does this mean along with this candlestick pattern and the confirmation by using the support and resistance levels. So RSI can be used to find the entries, yes, and exits. Like whenever there is a crossover or when we know that there is an entry. And during the strong uptrend or a downtrend, we can find the support and resistance, which is like 40 to 50 for uptrend and around 50, 60 for downtrend. So this way, RSI can be used in multiple ways to help you trade in a better way. And always use, do not stick to just one particular indicator, because it's better to always get confirmation and then do the trade. And that's it. Any questions, you're please welcome to ask me over here. I'll get back to you with the answers. And in the coming weeks, we'll be having the following webinars. We'll be talking about ADX and how to use it for trading. And we'll be talking about what is commodities trading. There are a lot of things which normal people or the inexperienced people, they don't know about commodities. So we will have a webinar in detail on what are commodities and how to trade them. Then we also have a very interesting topic coming up, which is the Fibonacci. It's very interesting. You will be surprised how it is helpful in stock market trading. And finally, we'll have some ATR, super trend, and all these indicator stuff based trading strategies in the coming week. This is just a small list. So we'll be having much more in the coming weeks. And remember, we'll be having webinars every Saturday evening at 5 p.m. and Sunday mornings at 10 a.m. So the timing will, it's based on your availability and my availability. We can adjust, no issues, anytime. And please feel free to ask me the questions. I will explain them to you. Okay. Fine, I have some questions now. When the RSI is above the oversold, is the time to exit or wait for next confirmation if I trade in sell? Okay. See, you mean to say that you sold when the price came down from the overbought 70, and you want to know when to exit. So your question is whether when it's getting into the oversold, should I exit or wait? Always adjust the stop loss and wait. There's nothing wrong to wait for getting some more profit. If the price goes further down, it's good for us. So please adjust the stop loss when the price moves towards the sell target, and definitely wait. And remember, when the RSI crosses this 30 and goes down, if we don't know, because it can reverse anytime and it can go longer also. That's why we suggest RSI for the range market. So when the RSI goes down, we really don't know how long it will go below that. The price will go below that. So what we can do is adjust the stop loss and wait. If you get some more profit, it's okay. Or if it hits, you're fine. You can exit with the profit. And next question is how to fix 50 MA in RSI. Please show this. No issues, I'll show you. 50 moving average. Okay, fine. I'll just remove this. Okay, please watch carefully. See, I'm using Alice Blue's web platform, and I'm showing you how to do this. So click on studies. Okay, first you add RSI. Okay, this is an RSI 14, and then next you click on RSI and select a moving average. Okay, here you have the option to select the moving averages for which field. For example, you have open, high, low, close, volume, high by low by 2, high, low, close by 3, HLCC by 4, OHLC by 4, and the RSI. Whatever you add in this charts over here will be shown here. So that's it. Now I got this moving average 50 of RSI. You got it now? Check out the tools over here. Studies, you will get a lot of good things and so many things. Okay, that's clear, I believe. And also check out the tools over here. So you can have, there are so many options over here that will help you. Like you have aroma, you have average lines, Fibonacci, you have lines, horizontal, vertical, you can have shapes, different shapes. And there are many different ways of using these tools that will help you a lot. Okay, next question. How to check in Bank Nifty RSI through uptrend or downtrend on Monday? See, RSI Yes, it works for any script. Okay. See, if you're going to check for Bank Nifty, what you have to do is very simple. Select Bank Nifty, and then you can have the RSI. Like as I showed you, you can select the RSI 14 by default, and which will clearly show that what is the trend. I'll show you now. Bank Nifty. See, the default settings are over here. See, this is for Bank Nifty, and you want it on a Monday. So this is a Monday. You see this? This is a Monday. So this is the moving average 50, and you see that this RSI is currently in overbought area. After some time, it comes down and crosses here. So you can make a profit out of this. If you're trading here, you can make a profit here. And again, when it again crosses up, you can enter here and you can take this profit as well the next day. So for Monday, this is for Monday. This segment is for Monday, and you know that when the RSI exits the overbought area, we can do it. So it's very simple. Use the tools, backtest, and check multiple parameters. You will understand it's easier and simple. It's the more you use the tool, the more you'll get comfortable with it. Okay. Any more questions? All right, fine. Any more questions? You can ask me on WhatsApp. I'll get back to you. And it was really nice to have you all to online today on this webinar. And we have been seeing a lot of things about RSI with practical examples of how to use them with different strategies for long-term, short-term, and also intraday using simple entry and exit strategies and crossovers. So please backtest. Please check out the tools yourself. Adjust the parameters, and you will see that there are a lot of things which you can interpret. Thank you so much for joining us today. And it's been a really nice time to be with you all today. Thank you so much. Goodbye.